Hi there, folks. Welcome to the program. This, of course, is Stinchfield, the podcast. The big question everybody wants to know, what is driving these markets down? I mean, I think we're going to see a big boom up and probably not too long from now, but there is a little secret that nobody is talking about that could be fixed. I'm going to say it could be fixed today if the Federal Reserve wanted to get off their asses and Jerome Powell wanted to get off their asses and fix this. And I'm talking about interest rates, and nobody realized that this is having a huge effect on the markets right now. We're in a position where I do believe it is political bias is why they are not lowering interest rates, whether it's a hatred for Trump or whether they want to see Republicans fail. But this is a big problem, and it's having a very big effect on what is going on now in the markets. Let me remind you, today's podcast is brought to you by VRAinsider.com. That's VRAinsider.com. I would urge you right now, go to this website. Sign up for the free 2-week trial. You are going to get a newsletter every morning. It's going to spell out anywhere between 10 to 15 positions. It's going to spell out everything you need to do to pull 35% returns. That's what they did last year. We're going to talk a little bit about that. But again, a 2-week trial, you get the whole back end. When we say free for 2 weeks, it's free for 2 weeks. It's a pretty amazing deal. VRAinsider.com. That's VRAinsider.com. I'm going to bring in the CEO, Kip Herriage, as we normally do on Fridays. I'm going to do that now. And with that, let's get the show started, folks.
Uncensored and unapologetic. This is Stinchfield. Here's your host, Grant Stinchfield.
All right, welcome everybody. Grant here. I want to bring in my buddy Kip Herriage, who is the CEO at VRA Insider. Kip, you've got to tell me this little secret. I'm going to call it a secret because you and I were talking before coming on. Nobody's talking about interest rates. What is the real deal when it comes to this, and why is this having such an effect on the markets?
Yeah, it's such a great to see you again. It's such an important topic because we know that Americans are talking about it, especially the second America. That's the America that I come from. Grew up with very little. Interest rates matter. They matter a great deal. The housing market is dead because of where interest rates are. Now they're coming down, the 30 years down from 7 to 6% because of Trump. But the 10-year yield right now is going up in a time of war. I've never seen this before in my career. With a geopolitical event like this or a time of war, rates always go down. So this is crushing Americans. And I believe what we're looking at here is an internal battle that's taking place. This is get Trump, in my opinion. And I don't say that lightly. Okay, I'm a lifelong independent. Yeah, I'm a big supporter of Trump because the left has gone crazy. But I call things like I see them, and I do my best to call it right down the middle. And I'm telling you, I've done this 40 years. I've never seen rates go up in a time of war. That's what's happening now. The 10-year yield was 3.8% before the war started. It's now 4.17%. The Federal Reserve, when there's a time of war or heightened geopolitical events, the Federal Reserve always floods the banking system with liquidity. They do something called open market operations, and that forces rates lower. It supports the country. It makes the country feel better. It's called a flight to safety trade, right? That's a normal thing. Rates are going up now. As I told you when we were talking earlier, if I were Scott Bessent, Treasury Secretary, if I was Scott Bessent or Trump, I'd be furious about this. I believe this is a battle happening behind closed doors right now because the markets are getting weak. Oil's over 80. That's expected. It's the Mideast, right? By the way, oil was just at this price just over a year ago. So let's keep things in perspective. This is not crazy, not yet anyway. But the biggest thing is interest rates. It started in Powell's first term, right? First term with Trump in 2018 when he crashed the market into Christmas, when he was hiking rates in December when no one was around to buy the market. It literally crashed the markets in December. And now he's doing it again. They're doing it again. I believe this is get Trump. I believe it's control Trump. And Trump's instincts have been right about Jay Powell. Jay Powell is not the man for the job. Thankfully, in May, we'll have Kevin Warsh on board, and we can see a return to normalcy and sanity in the interest rate market because this is killing people and it's hurting the markets too.
So, Kip, explain to me how this works because a lot of people don't understand quite how this whole interest rate game works with the Fed and flooding these banks with liquidity. So what would they actually do? do they lower the interest rate that banks borrow money from the Fed, or do they infuse cash into these banks that they can loan? Like, what actually happens that they need to be doing in the most layman's terms?
They have a number of different operations that they do, but the first and most important, by far, not a close second, is open market operations, where they go in and physically buy investments that banks own, and they give it with money they just printed. Right? It's cost the Fed nothing. This is freshly printed money, legitimately. This is the way it works, and banks are all of a sudden flush with cash. The markets know that's happening, so the smart money dives into the market. The smart money dives in to buy because they know what's about to happen, right? They know that markets are about to go up because of this, and that's not happening now. That's putting pressure on the markets. This is a big part of the midterms. If the markets are going down, that's not going to help Trump at all. So I think, again, I don't say this lightly. I think this is get Trump, and that's a high confidence call.
All right, how quick could this be instituted? I mean, is this something that can turn around in days?
Yeah, absolutely. It could happen tonight. It should have already happened. I was really surprised. Like Monday, you've been with us for a while now, so you know that the old adage, when bullets fly, stocks are a buy. That's why when war breaks out, the average investor thinks, oh my God, the market's going to go down. No, it doesn't. It goes up, right? Because it's been anticipated. Then it happens, and people know the banks are going to be flush with cash. All of this is going to happen. And so the smart money is buying stocks at the open. We did that on Monday morning, as you know. And again, we still haven't broken those Monday lows. So that adage is still held up. But all it would take for them is tonight. And I have to believe that Treasury Secretary Scott Bessent is all over. I would have presidents and Treasury Secretaries have done this in the past, and it's pretty widely known. They've gotten into heated debates. And I think Bessent's one of those guys. He got into a scuffle with Elon Musk. I would imagine that Bessent wants to put Jay Powell up against the wall and shake some sense into him, because this is not the time for politics with the American people. This is hurting, and it's one of the reasons the market was down today.
Do you remember I got to go see Bessent speak in Dallas, and I was supposed to get an interview with him. It didn't happen, but I think I told you the first question I was going to ask him was who threw the first punch, Elon or Bessent. So,
I was hoping you were going to ask that question.
It would have been great. All right, so the other question I guess people want to know, if the Feds aren't doing this, I know you're very bullish that you think this Trump miracle of an economy is still ready to take off. I know we've got the big, beautiful bill. Many of those things are still being instituted as we've just come past January and now moving into March. Do you still feel very bullish on the market?
Absolutely. We've been the most bullish market strategist in America for more than 3 years. 4 years ago, actually, we told people this is the roaring 2020s. It's a generational bull market. And that's because, and to answer your question, yes, this is a structural bull market. This is the thing that most people don't know very little about. You won't hear this on television or most channels. A structural bull market is the most powerful kind of bull market because it's based in the fundamentals. Look at corporate earnings. They're going parabolic. Look at margin expansion for these companies. It's also going parabolic. Something else we might want to talk about in a minute. Transportation stocks are going parabolic. Those are all signs that we have a strong economy. So yes, our big three has been what's going to keep driving the markets higher. We think the Dow's going to 100,000 by 2030, basically doubling from here in 4 years. Our big three have been the Trump economic miracle, the innovation revolution, and there's an absolute ocean of liquidity out there. All of these are going to continue to support prices. And this little kerfuffle with Iran, which is kind of what it is from an American's point of view, right, at least at this point, is going to soon. I think this is Custer's last stand, as I wrote this week, and I hope and pray it's over soon.
Yeah, I do too. I think it will be. I think it may go on through the end of March as they continue to hammer away. But we're doing great damage to them, and I think they keep saying that more is to come as they start to wipe these things. I don't know how Iran is going to even be able to survive much longer than they have now. So with that, I've got a question. So much of the markets have been driven by these AI and technology stocks. You got NVIDIA, you've got Micron Technologies, you've got Broadcom. All these stocks have really boomed. I mean, I don't know, like a year ago, was it like they were like $150 cheaper than they are now, some of these stocks. Correct?
Yeah, that's right. This is such an important topic. We've been talking about this with our subscribers and clients now for a couple of weeks. Starting last October, as you exactly said, we saw software stocks like Microsoft, leading software companies, used to be the go-go momentum group, right? Software stocks, momentum stocks, and Bitcoin all got hit in the same week. And that was a tell, right? So here's the key. They started getting hit in last October. However, the market kept hitting all-time highs. How is that possible, right? Well, it's because it's a rotational bull market. It's part of our structural bull market theme. Because even some of our leading stocks go down. The Magnificent Seven have been going down, right? As other groups are picking up the mantle and they're leading. This is supremely bullish. It's a textbook bull market signal. And now what started happening on Monday actually late last week is those same software stocks and Bitcoin, they bottomed. Bitcoin's up 23% since last Wednesday. Software stocks that you talked about, they're up 13%. They're both up today. Software stocks are up today, even in this down market. Those are tells. We call that first in, first out. Smart money tells. That's just the way this happens.
Why do you think it is these technology stocks like NVIDIA, Micron Technologies are down with the rest of the markets? I mean, what does it really have to do with Iran? They're AI stocks.
Right. Well, they started going down last October, actually. NVIDIA's been going sideways. They've been doing some hot, semis that have done well, and the semis do lead. But I think more than anything, this is just the way the market operates. The market's smarter than every investor combined. That's why I never try to tell the market what to do. We pay attention to the signals it's giving us, right? And that's what we do with our VR investing system to let us know what side of the market to be on. And I think it's just a rotational theme. This is perfectly normal, happens all the time. And if you're a smart money investor and you know how to locate these and see them, you set you up for some great opportunities in trading vehicles, right? That we use with our leverage ETF program to really make a lot of money over a 2-3 month period. I think that started now. Again, Bitcoin's bottom, software, momentum stocks have bottomed. We think that will now lead higher. And again, it's just a normal rotational theme.
All right, let me show you. Hold on one second here. Let me show you. You have a chart that you sent me. You wanted me to show this today. Well, I'm going to put it up. Why don't you tell me exactly what we're looking at here and why this matters?
Okay, this is the Dow Jones Transportation Index right here, okay? It really did nothing during the Biden administration but go down. Look at what's happened since Trump has been in office. But what I want you to look at that box that I highlighted from mid-November. The transportation stocks are the hottest sector there is. It's up 27% in this market. And it's a leading indicator. This is a leading indicator for the economy. So what we believe is happening, what we know is happening is if transportation stocks are going up, that means transportation's going up, right? It means flatbeds, semis, rail, all of these are going higher. That's a sign of one thing and one thing only, economic strength. And because housing is still dead, again, because Jay Powell won't cut rates, because housing's dead, we're not getting strength in transportation from housing and building materials, that kind of thing. We're getting this strength from manufacturing. This is Trump's economic miracle. This is his tariff policy looking at you right in that chart.
That's
an economic boom signal right there.
So when we talk about transportation, are we talking about trucking and those types of things, rail?
That's right.
Does it include the airlines as well or no?
It does. Airlines are in those as well.
All right. And so I guess if the airlines are doing well, two things are at play. Business is probably doing well because people are traveling for business. I would imagine the large majority of travelers are business travelers. But then you also have vacation travelers. If people are taking vacations, that's got to be an indicator that we're doing okay.
Yeah. Again, the second America is still getting pretty much crushed, but the first America has never been healthier. Look, we have 40% of Americans have no mortgage. They paid their mortgage off. Average home equity in this country is 70%. Again, you're not hearing this anywhere else, okay? This country is flush with cash. Again, first America and corporate America. In the corporate world, and again, this is another stunning statistic, a debt to market cap of these companies is at 53-year lows for corporate America. Again, they don't have debt. They just have cash. That's why share buybacks keep going at a record pace each year. And again, these are all signs of a market that wants to explode higher. This is what's going to happen. This is a buying opportunity. This dip is a buying opportunity.
All right. Explain first America, second America.
First America are people that basically used to be middle class, right? And now they've elevated themselves to upper class, right? Just because they've gotten older, the boomers, right? So we're the first America. Second America is everybody else that's been destroyed because of Biden and Obama and these horrible trade deals that now Trump has dismantled. So now we're seeing a return back to the good America, right? And the second America, people that are struggling are going to see a lot more money in their pockets this year, as you mentioned, from the One Big Beautiful Bill and so many of other Trump's economic policies. But I think, again, the market closed down a bit today. NASDAQ was barely down at all. It was down less than 0.3%. That's the leading indicator you want to follow. The Dow was down more. But I think that this market is going to turn on a dime. And I think people that are buying this week are going to do real well.
All right. Explain to me a VRA Insider. I'm such a fan. You know, I get your newsletter every morning. Spells out this 10 to 15 positions. You know, you're talking about boomers. There's people like my age. I'm 57. I plan on working a long time. What I do, I don't ever really want to give it up because it's not really like work. But
Right.
if I have to catch up and I could find somebody like you that can offer the newsletter and what you're doing, 30+% returns, that gives me an ability to catch up if I was a little behind at 57 years old. Am I wrong on that?
No, you know, look, I come from that second America, as I say. We're native to, we're fifth and sixth generation native Texans. Myself, both our sons work here, and my wife, and of course our staff. I think they're all from Texas too. So we're a red-pilled Texas and America first company, and we'll take anybody, but probably 80% of our clients and subscribers are red-pilled Americans, just patriots, right? And so I've never forgotten where I came from. And like you, I love what I do. I'll never stop doing this. What would I do with my time? I'd be so bored. And I love this. But I think the key, what we do is we've beaten the market 19 to 22 years. Started the VRA in 2003. I worked on Wall Street 15 years. Helped take 7 companies public, raised several $100 million, that kind of thing. And I retired at 38. And then in 2003, I got bored, started the VRA at request of clients of ours. And now we have thousands of subscribers all over the world. And we put out a daily letter. Everything we do is based in the investing system that I built, based on the advice from my mentors, which is just Wall Street titans, okay? And really good guys, and taught me the way the markets really work, not the way Wall Street and most brokers believe that it works or try to teach you that it works, which is why they underperform the markets every year. They do. Again, our last 3-year average return has been 37.7%. And again, we've been the market 19, 22 years. We keep it simple. We only recommend common stocks, ETFs. We have an ETF trading program. And then, our favorite, gold, silver, Bitcoin, we're big believers in those. We've done really well there over the years, long-term believers in all of those. And bottom line is we're not day traders. You know, we show you how to build a portfolio, as you said, with not more than 15 positions is the most we take at a time. We hold our common stock positions often for years because these are growth companies. Why would we want to sell them if they're going 30, 40, 50% a year? And they are. And our leverage ETF program, we do trade with that. So we hold a position there on average about 3 months. But we also have an options program. So we stay pretty busy. But for the average person that has had a bad experience in investing, we do have our 2 free week opportunity. You get everything our members have for 2 free weeks. Love to have you come join us. And again, we have a great group here with friends of Grant's and other red-pilled Americans that are just great to work with.
Well, I know so many Stinchfield's Army members, and you come on the Real America's Voice show too, have been so happy with what they're getting with you. I've told people I took a sizable portion of my portfolio and I opened up a separate account at Schwab, and I said, you know what, I'm just going to follow Kip and his team, and I'm taking part in that options program. And I'm taking part in, obviously, the morning newsletter and that portfolio that you basically spell out for everybody. And it's been fantastic. And so I love having you on the program. I love talking about this stuff. And I'm like you. I think the future looks very bright for all of this. Kip, I'll give you the last word.
Could agree with you more. You know, we're surrounded by fear mongers and people that want to scare you. In our last book, my oldest son and I wrote a book called The Big Bribe. In there, we dedicated pretty much a whole chapter to something that we call the psyop of negativity. Mm-hmm. And this is why so many people think that there's another 2008 coming. It's right around the corner. People are afraid to invest. And so they're leaving their money in the bank and they're getting completely ripped off because after inflation, they're not making anything. They've got, people have got to come to, frankly speaking, and realize that we're not going to have another 2008. This is going to be a boom time that's going to last into the 2030s. And it's a great time to be an investor.
This was my problem. I had a lot of cash lying around. And look, I'm blessed to be able to say I had a lot of cash lying around. But it really was, I'm losing money. Inflation was costing me more money than I was gaining in interest. So, just an overall bad move. I love that I found you guys. Kip Herriage, I'm going to tell people how, well, thank you. I'm going to tell people how they can find you. And again, take advantage of this 2-week trial. And as always, thank you for coming on the program.
Great seeing you, Grant.
Absolutely. Great seeing you too. And have a great weekend. All right, folks, listen, here's the address. I'm going to put it up on the screen for you. VRAinsider.com. Super easy. VRAinsider.com. That's no overstatement called crush the market. This is what will happen. I love it. I love these guys. I love being involved with them. And they're good people all around. And I mean that too. They really are. VRAinsider.com. Take advantage of that 2-week trial. You can't lose there, man. 2 weeks for free. What more can you ask for? That's going to do it for us. I'm Grant Stinchfield. We'll see you on the Real America's Voice show tonight. Thanks for watching, everybody.
Can you hear me, Grant?